Hello, everybody. How are you doing? Very nice to get to talk to you again. We are again after Friday, of course. Yesterday we tried another language, and today we are coming back strong in English. How's everybody doing? I hope you had a good day in the market yesterday. I really do. But it was a boring day, very boring day. Not a lot of action, which of course is okay because we still have very important events for this week on the agenda. We have the UK election, we have the Fed, we have a lot of really interesting stuff that is going to happen this week. And hopefully they will create trading opportunities. We want some action. You know, when I see the difference between the daily low and daily high, the daily range on the euro, for example, at 30 pips, I really feel sad because, you know, that's a day wasted. We don't want to waste any day. We want to try and hunt this market every day. And that's why we are together again. I welcome everybody wherever you are. It's going to be an exciting day. Thank you very much for being here, everybody. And let's hit the charts immediately. Let's go. So guys, the euro, oh my God, it was a boring day yesterday. Yesterday, of course, on Friday, I'm going to tell you what happened on Friday, but first let's see what is the daily range for yesterday. It was something like between 52 and 78. My God, that's not even 30 pips. That is 20 something, 26 pips. That is really boring. But we do hope that today things will change. Okay, people, but first, before we do, just allow me to update my chat link so I can see everybody, every comment, what is everybody is saying. I need to update the chat link, so just give me a few seconds, guys. This cannot be done before we go live, so we have to do this every day in front of you. I know it's not very exciting to see, but we do have to update the chat link every day. Okay. Meanwhile, let's talk about what happened on Friday. Let's start talking about what happened on Friday. Friday was the jobs report, of course. Jobs report day. It was an important day. It was an important number. And guess what, guys? We had a very strong number. 266,000. 266,000. Which was, you know, it's very hard to comprehend this unbelievable number. Everybody was talking recently about recession in the United States, and I was laughing. You know, what the hell is wrong with your mind to talk about recession with this jobs market? Every month we are getting more than 150,000, sometimes more than 200,000. And people are talking about recession. I think there was only a political play for some people who wanted to the American economy to look bad, so they get some election advantage. Well, of course, it was really silly to even talk about, and this report just blew that off the table. There is absolutely, I think one. I don't know who, I forgot the name. One of, I think, a previous Fed official said this. This is the end of a 1 year of recession fear. So I love that quote because, you know, it was unbelievable for people to expect a recession while we are having these jobs numbers. They are just amazing. So I really believe that the American job market is the reason why we should not believe this recession crap. I'm sorry, it is crap. It's something we just can't take seriously. And this is my opinion about what is expected from the American market, American economy. Sorry. However, that does not mean that the dollar can't go down. It means it will be harder to see the dollar going down when these numbers come out. For example, like on Friday, we saw the dollar move to the upside, which made it a little bit hard for us to make money. For example, on gold, we had both the buy and the sell triggered. One of them hit the stop, one of them reached the limit. So right about zero. It was a 0 day for most instruments because, of course, of the strong move that came, that happened when the price reacted to the jobs report. The jobs report, of course, usually I had this to recommend to my clients. In the past, I used to say this to all my clients. Everybody was asking me. I said, just avoid these very strong and important numbers. You don't need to be in the market when they come out because it's more or less a gamble. You can, of course, try your luck, but that's not analysis. And nobody knows what is the number until the number comes out. So if you want to try a buy, a sell, and then the number comes out, you are under the mercy of the number. If the number is good for your position, you're going to make money. If it's not, you're going to hit the stop. And sometimes these very fast move, you don't even fill the order at the price you have requested. We have slippage, of course. And maybe you had a stop at 60 pips and then it's closed at 90 pips. It depends on how fast the market moves. Sometimes it happens. Most of the time it's not 10 pips, but sometimes it is more than that. So it depends on the speed that the market moves with once the number comes out. I'm still trying to wake up. It's still very early and it's cold. As you can see, this is the winter me. This is how I look in winter. It's getting really cold here. Not really, really. Well, to us here in the Middle East, it is cold when it's below 10. It is cold when it's 8 or 9. It is cold, but I know for some places in the world that's fine. That's not cold at all. It's not cold even if it's 1 or 0. But for this part of the world, it's not what we really like. We like it a little bit warmer than this. So this is the winter me. This is how I look. No more t-shirts, and I need to keep myself warm. So that's it. Okay, my friends. Okay, people. Let's start talking about the euro from a technical point of view. Okay. So, guys, if you remember on Friday, we were counting the waves and we said we have a 5-wave sequence to the upside and we have an A. We were, I think, probably around here. Maybe, yes. I think we were around here when we did Friday. Yesterday we tried an Arabic webinar and today we're back to English. This was just an experiment. So we had no English webinar yesterday. So I'm going to connect what we are talking about right now to what we said on Friday. Remember on Friday we said that this is A and this is probably B, and I said we have a C that is going down. I expected C to stop somewhere between the bottom of wave 4, around 64, down to the 50% level, which was 48. Do you remember that? I was not very far, the 50% level, yes. I was not very far. As you can see, yes, we dropped below the 50% level, but only for pips, which makes me feel very good about this wave count. However, this is not looking very good. I need the euro to show me that it can do more than this, because up until now, what I see here is a 3-wave sequence, not a 5-wave sequence. That's not good at all, guys. I hate to see this. So if we do not push beyond the top of what could be wave C here, I hope it's not wave C. I hope it's 1, 2, 1, 2, and then we started wave 3. This sequence happens a lot. 1, 2, and then 1, 2. The second 1, 2 are the subwaves inside wave 3. So I really hope this is what we have here, not an ABC, not like this. I want to see it 1, 2, 1, 2, and then we will have 3 to the upside. So it all depends on what the euro is going to do now, today. Today is very important. We need to see a push in the right direction today. We cannot afford not to see one. I want the euro to be pushing to the upside today. The sooner, the better. Support and resistance, let's specify them. This is the best or the most important part of building a trading strategy. You need to find the best support, the best resistance, the ones that you think when they are broken, they will give you a good trading opportunity. So, of course, if you have been watching me and if you have seen my webinars recently, you know that this is how I start my day. I find the support and resistance for every instrument that I'm interested in. I look for more than one support, more than one resistance, until I find the one that I think is most important. And when it's broken, or if it's broken, my order will be waiting, ready to take advantage of that move. If we break resistance, buy order will be there waiting just above the resistance. If we break support, sell order will be there just below support, waiting to take advantage of the market dropping. Okay, so where can we find support and resistance? Remember on Friday we said that even with a break below this trend line, it was expected. Of course, because we needed the C wave to complete the 3-wave sequence to the downside. And I said, even, you can go back to that video, it was a good prediction, but we did not make money on that because, you know, I didn't have the heart to sell, let me tell you this. I wanted to see the euro move to the upside, so I had to buy here, just above the top of wave 5, and a buy, I think, at the 50% level we had one, or maybe a little bit higher than that here. We closed that long right around where we opened it. A few pips of profit or loss, just a small, very small number. I don't remember because it was not exciting to watch the market close very close to where we opened our position. So no gain, no loss, nothing seriously important here. So today we are going to try and do something. Now, I really need some pips today because yesterday we had the Arabic webinar, so we are at 0 pips this week. No profit, no loss for you guys. This is the first English webinar for this week, and I'm gonna try my best to make you a few pips today. Another day, another dollar. This is my motto for today. Let me try and draw trend lines. Okay. So this trend line was expected to give way. That's not a surprise at all. Now, what I want to see, what if we draw the trend line from let me delete this one. And right now, what if we draw a trend line connecting this bottom here, November 29th, with Friday low? I don't know why it's not reaching to the bottom. Yes. Yes, okay. That's great. So as you can see, this trend line is running very close to current market price. Can we say that with a drop below this trend line, the euro will be seriously hurt? Let's see about that. I need some help for my indicators. Okay, so neutral reading here, more or less the same here. We have a long signal on the MACD, but it was generated a while ago, yesterday, very early in the day or in the morning, not very early, but in the morning. And now, as you can see, we are facing a resistance at the 49 simple moving average. SMA 49, one of my favorite moving averages ever. So we need to break this to the upside or else. Now what if we draw a trend line connecting the tops of wave 5 and wave B? Like this. Okay. Now, just breaking this trend line by itself is a reason to worry, of course, but it's not a reason to sell, because we found support between the 50%, 61.8. That's a very good place to stop. And remember, we had this move on jobs report, so it was sharp. It probably pushed a little bit more than it should because of market excitement. So we can call this an accurate stop at the 50% level, but up to the 61.8 level, that's also not very far. Actually, it is closer to the 61.8 level because Friday low was 1038, while this Fibonacci level is at 1032, so only 6 pips away from it. To me, I am going to use these two levels, the one we got very close to on Friday, 61.8, and the 71.4 at 1019. I want to use these two numbers, these two levels as support levels. And I'm gonna look for a resistance, and if this resistance gives way, we buy. Only with a break below this support we can sell. So guys, what we need to do right now is identify support and resistance. And as you can see, support at 1019 to 1032. This is my support for the day, the area between the 61.8 and 71.4 retracement levels. So again, breaking this trend line by itself is not a reason to sell. It's a reason to be cautious, but it's not a reason to sell because we still have a 5-wave sequence to the upside, which is important to keep in mind. When you have 5-wave sequence to the upside and then a obvious three to the downside, you can't jump too early on the sell side, because that can be a huge mistake when another 5-wave sequence is pushing to the upside. In this wave count, there are many factors that make me believe that this is a sound, solid wave count. For example, wave 3 is the sharpest. This is something that is normal. Wave 4 is sideways, again normal. Wave C is very sharp. That is again normal. Wave B is a little bit slow, not really sharp. It is moving and it retraced a lot of wave A, which is another good point, but it's not sharp. This is what usually should happen. And the bottom of wave A is very close to the bottom of wave 4. All of these things go along very well with the wave principle guidelines. You know, there are rules for the wave principle and there are guidelines. Rules cannot be broken. Like, for example, wave 2 cannot travel beyond the starting point of wave A. This is a rule. You can't count 1 and 2 if 2 is here. You can't do that. A 3 cannot be the shortest between the waves in the 5-wave sequence. It cannot be. If wave 1 or 5 is larger than 3, only one of them, that's okay. But if they are both larger than 3, that cannot happen. This is a rule. Now, in addition to rules, we have a set of guidelines that is very, very helpful in judging if our wave count is worthy of our confidence or if we need to be careful about it. So in this case, I have how many guidelines met? Wave 3 is the longest. Wave 4 is sideways. The bottom of wave A is very close to the bottom of wave 4. Wave B is not sharp. Wave C is sharp. So 5 guidelines are met, which makes me believe that the euro still has a chance, even with Friday jobs report, with this very strong number, 266,000 jobs in 1 month. Guys, that's the population of a small country, or let's say that is a large part of the population of a small country. So when you can create more than 250,000 jobs in 1 month, that is really, really great for the economy. And of course, as I always say, I used to say this in my training sessions, currencies are the stocks of countries. So you need to understand what's going in the country to understand what its stock is going to do. Of course, I'm talking about the currency of the country. Just like when you are trading a stock of a company, and you need to understand what this company is doing in order to trade this stock. So it's the same thing. You cannot trade the euro without understanding what's happening in the Eurozone or Germany or France. And you cannot trade the dollar without understanding what is happening in the United States. So we should keep an eye on these numbers. We should respect them. They are very important. They can, of course, give us a lot of information that we need, that we can find very helpful in estimating the chances of a currency going up or down. But there's one thing that I really want you to note, which is the size of the move up in the dollar on Friday. Now, 266,000 jobs. When I saw the number, if it was as a trend for the favor of the dollar, I said to myself, the move should be 120, 150 pips, something like that. More than 100 pips, definitely, with this very, very strong number. But how much of that did we achieve? This is the move, guys. It's not very strong at all. It is hardly, 60 or 70 pips for a number that is 266,000. And it was terminated on Friday. We got to this low, and that's it. The euro is back up. It's trying to recover. So with a number like this, and very limited reaction like this is the kind of situation where the market is not giving a lot of importance to this number, because if it did, the euro dollar will not be trading here right now. It will be trading here, below 110. Do you see that happening? No, of course not. A low on Friday when the number came out, and that's it. I think we were already below 111 when the number came out, and we got to 1038. Come on, give me a break. Is this the kind of move you expect from a 266,000 jobs created? Of course not. And this is an indication that the direction is against the dollar, because if we were in a trend that favors the dollar, pushed by a number this strong, the dollar would have made much, much more gains than it did on Friday. But maybe the market's waiting for the Fed. Not maybe, of course it's waiting for the Fed. Maybe the strong move will not come until the Fed comes and they say they have their statement, and we'll see what they have for us. And that, if that's bad for the dollar, that would be great for us, because my technical outlook is dollar weakness. And when I see that happening, when there is something that helps moving in that direction, that will help our trading, of course, make us make some profit. But if the Fed comes out and gives support to the dollar, that's not going to be easy for us, guys. So the Fed, we need to keep our eyes on the Fed for the time being. Aside from that, on the chart, we do have a support around 1060, but I'm not very interested in that. I'm interested in this support, 19 to 32. Okay, now for the resistance, obviously we are not able to break above the top of the moving average band here, so I need a push above the top of this moving average band. And as you can see, this band is currently around 67, 68. I'm going to consider it to be at this top here, which is 71. So I'm going to add resistance here. Okay. Now with this, of course, we can start building trading strategy. Now, if the euro moves to the upside like we expect, and breaks this intraday high here, the Asian session high for today, if we do break above this one early in the European session, that would be great. That would, of course, be a reason to go long. So I'm going to place an order to get in with a buy position right above this resistance, very, very few pips above it. And I'm going to place my stop and reverse, of course, below the bottom of the support area. Very simple business. Very simple trading strategy, very simple analysis strategy. My advice to you is always keep your analysis simple, keep your trading simple, and you will achieve results. You don't need something really, really complicated to make profit in this market. You know, with support and resistance, we have been making profit, as you saw for the past few weeks with these webinars, that I'm really proud of, and I'm really happy that you guys are here with us. So what we need to do today is to continue doing the same thing. Just keep it simple. Spot the resistance, spot the support, and when we have a break, go with the break. Okay, people? So let's start building trading strategy. Now, I'm going to place an order to buy just above this one, you know, 1 pip above 71. I'm going to buy it 72, very close to current prices. Now the stop, how about 20 pips below the support? So it's going to be 999. Now the limit or target, let me give you two targets, target 1 and target 2. Initial target is going to be, of course, we need a minimum to test the stop right here. If this is an ABC, then this is corrective. And when a corrective pattern terminates, is finished, then we should go beyond or at least test the point from which this correction started. And this is 1116 here, I think. Yes, 1116.3. So 1116, let's push it just a few pips above that so we get ourselves 50 pips. 1122, I like this number. 1122, I like numbers like this. Second target is going to be, of course, we have that Fibonacci level at 1208. It's a short-term Fibonacci level, not short term actually, it's now a medium term because we have been waiting for months for this retracement to be tested. So this is going to be my buy recommendation for today. And I really hope that we have this position early in the European session. I want it to be triggered, but in case something strange happens, nothing is strange in the market, but let's call it a surprise to me personally, something that goes against my expectations. If this happens, I want to be there in the market as well. I want to sell at 999 with a stop at 1072 and targets, target 1, target 2. Target 2 is definitely 903. We have talked about this support many times. Now for the initial target, I need to visit the chart. So I want something, my second target is going to be around here, so I want something closer than that. Let's see retracement levels for this whole recovery attempt. We do have 71.4 at 66. What I have here is 78.6 retracement level at 944, and as you can see, it's very close to this bottom here, 941. So when you have a bottom very close to a retracement level, that confirms the importance of this level. So I'm gonna use 944 as my target. 944. So this is it, guys, but we have something new for you today. We're gonna start doing right live on the air. And that is that I am going to issue this signal to our Telegram group. I'm gonna create a picture with these signals and send them immediately to our group. So first I need paint. And now I have this file here. So today is 10th. Now it is around 6:45 GMT. Very early in the morning GMT time. I want to, of course, buy at 1072. I'm gonna, sorry, I have another slide, I think, with the stop. Yes, I want this one. Okay, so December 10th, 6:45 GMT. And I want to buy at 1072. My stop is going to be 999. Sounds like German. 999. Let's see what targets we have, guys. Initial target is going to be 1122. I'm going to place the second target at 1122. That is 50 pips, of course. And the second or third target is going to be 1208, and that will be 136 pips. Now I'm going to give you even a smaller target at 11. That, of course, is 28 pips. So this is the signal. And I'm gonna print screen. I want you guys to be a part of this group. We have hundreds of members here, hundreds, and it will be very good if you miss the webinar, if you wanna. So buy at 1072, stop 109.99, initial target 11 for you guys who like their very small targets. For normal traders, 50 pips, and for traders with a lot of ambition, we have a target of 136 pips. I'm going to save that. Yes. Now I want short. Also around 645. Gonna issue them together. We have a sell. Of course, it's euro dollar. We have a sell at 109.99, and we have a stop at 1072. Now the targets. 944, I'm going to use that as a second target. $55 pips. And we also have 903. As second target. That is 96 pips. I'm going to have a very small, ultra small target here. We have some support at 66. So I'm going to use this 33 pips here. And this is also another signal. I'm going to print. And you guys... I want you guys to be in our group on Telegram. I really do, because just in case you're not following this webinar, maybe you missed the minute or the couple of minutes where we place these orders, where we issue these signals, you can find them in a group. I want you to have that kind of backup system, let me call it. So if you missed the signals during the video, you will not miss them during the webinar. This is our group, FX Educast Signal Group chat, and I am going to start talking on the group. I'm gonna issue these two signals together, and yes, and send. And as you see, guys, now we do have the signals for today. We started issuing the signals to our group. Please be a part of this group. We want to have you with us. It's going to be exciting from now on, because I'm taking control of this group. So I'm going to be in touch with you every day. I'm going to send you signals. You can ask me anything you want in English, please. Okay, guys, and I will be there for you. So this group is now open for real discussion. It's open for interaction between you and me, and I promise you I will do my best to answer any questions you may have during the week, during normal working hours. And I will be sending my signals here for you guys. So for today we have these signals: the buy at 1072 with a stop loss at 109.99, target 111, target 2 1122, target 3 is 1208. I prefer to use this one when I place the order in my account right now. I'm going to do that. And of course, we do have a sell signal at 109.99 with a stop at 1072. Our initial target is going to be 966, then 944, then 903. Important support here. Okay, people. So these are the first two signals that I issue live in front of you to our Telegram group. I want you to be in this group. Anybody who's watching the video, if you have Telegram, get on the Telegram and join our group, FX Educast Signal group chat. And if you don't have Telegram, you download it right now. You get yourself a Telegram account and you send us immediately. Okay, people? So I'm going to go to my QTimeFX live account and I'm going to place my orders. I will have a buy stop at 1072 with a stop at 109.99. And I'm going to use target number 2 from the group. Where's the group? Here's the group. I'm going to use target number 2 here as my own target for the day. You can pick anyone you want from the 3. It's up to you. It's up to your trading strategy. But if you want to follow me, literally follow me and do everything that I do, then use 1122 as your limit for today, 50 pips. And fingers crossed, we placed it. So now we have an order to buy at 1072, stop 109.99, as you can see, and take profit at 1122. If you don't join us on the Telegram, you may miss these opportunities, these trading opportunities that I will be sending to you there, right from me to you. Okay, so join that group immediately. Join it today. I want to see you guys, all of you, everybody who's watching this video. I want you to be in that group and I want you to tell me on that group that you came from the video. Okay, people? Okay, my friends, my brothers and sisters, my soldiers in this fight against loss. Let's place the second order before we take our initial break. First break for today, initial break. Like that, like initial support or initial resistance. So we have a sell stop. It's going to be at 109.99. And then we will have a stop loss, of course, at 1072. Now the target we have, let's go to our group. We have 3 targets. Which one are we going to use? I'm going to use the second as well, 109.44. Most of the time, I'm going to use the second. The one in the middle. You know, the first one is going to be very small for you guys who just want to hit and run. And the third one is going to be for you guys who can wait, who have that capability to wait. Not every trader can do that. When you just take a position, place your stop, place your limit or take profit at a 3-digit pip profit, more than 100, 120, 30, 50, something like that, and you wait. And I know some traders do that, but I have noticed from my experience with many traders in 13 countries, 4 continents that I have trained or talked to or worked together, I have noticed that not everybody has that capacity to wait for a target that is 120, 130 pips, 150, 200 sometimes. People want to get in, they want to get out, they want to put these 25, 30 pips in their pocket and then call it a day. And they say, hey, we made 20 pips today, we made 30 pips today. Tomorrow we're going to do the same. The day after we're going to try to do the same, and so on. So that's good. Of course, that's good. But I prefer the one in the middle. So if you go to this group, most of the time, of course, I'm going to place it in front of you. I'm going to place every signal in front of you on our live QTimeFX account. But most of the time, it's going to be target 2 that I use in my order. So you see here, 109.44 in the group and 109.44 here, and place. And there you go, guys. Now we have a sell at 109.99. I hope it's not triggered. I hope it will not be triggered. I want the buy to be triggered today, but of course it's a market. It can go in any direction it wants. It can go up, down, or as I always say, in circles. And I got this, the in circles thing from, if you watched The Wolf of Wall Street, you know that it's from that movie. I don't want to talk about movies now. It's a very exciting movie if you work in the market, but it's not really a family-friendly movie. So I don't know if I can recommend it, but it was really, really good entertainment if you like financial markets. Other movies that I like Margin Call a lot. It's one of my absolute favorite movies in the world, in the history. The Big Short. And if you go back in time, when I started working, well, there was this movie that is called Boiler Room. Oh my God, that was a great movie. So all these movies, Too Big to Fail also is very good. All these movies about financial markets, I really, really like them. And I recommend if you're looking for some entertainment, check these movies, the ones that I just mentioned. So the market can go up, can go down, or go in circles. This is from The Wolf of Wall Street. Very, very entertaining movie. So with this, guys, we now have 2 orders on the euro. We have issued 2 signals to our group, and it's time to take our first break for the day before we come back for a second hour of excitement with you guys. And before I go, I want to give a huge thank you to our favorite broker in the whole world, QTime FX. Guys, this live stream is sponsored by QTime FX. They want you to make money. That's why they are sponsoring these webinars. They came to me, they say, Munther, we want you to guide our clients into profit zone. Into the profit zone. Let's do this. And of course, being a trader and analyst that really, really like to see people make money in the market, of course, I found that to be something really fulfilling. I really want you guys to make money in the market. I know when I make money myself, that makes me very happy. Sometimes even when I'm not in the market, just my analysis and I expect something to go up, for example, and it does, that gives me satisfaction. But nothing gives me more satisfaction, not even withdrawing profit and seeing the money reach my bank account. Not even that gives me the kind of satisfaction when one of you guys send me on social media or face-to-face, if we are in the same place, they come to me and they say, Munther, I made some money because of your analysis. I made this much pips on the euro. On that day, you said buy the euro, about the euro, I made 40 pips, 50 pips. Nothing gives me more satisfaction than this. And I'm serious. I'm not trying to look like a very good man, full of virtue, who wants everybody to be happy. That is really what I feel when people tell me they made money because of my analysis. I want to help you guys make money because I know it's very, very hard to make money. And when I started this thing, it was very, very hard for me to start. I lost a lot of money, but I did not give up. I went back to my room. I said to myself, I want to master this thing. I want to be very good at this thing. Sorry. And I spent too many hours, too many days, too many nights trying to learn how the market behaves until I got to a degree that I'm okay. After 19 years, I'm reading tens of books, maybe more than 100 books. And after all these experiences, after tons of profit that I have managed to withdraw for me and for my clients from this market, I say that I am good. I'm okay. I'm not super. Because from time to time, you get the market wrong and you get a stop hit here, a couple of stops hit there, sometimes maybe more than 2 in a row. So we have to understand that nobody is very good, too good. Nobody is too good for the market. Nobody is that kind of person who cannot lose money. Everybody can. But with hard work, you're going to make your winners more than your losers. Of course, when you begin as a beginner, you lose this much and you make profit this much. You're out of the market in no time. But with years, with experience, with every book you read, with every hour you spend on the chart, the balance is getting closer and closer and closer until you get to that point where you lose one win one, lose two, and win two. Your account is very close to where it started, and then you continue fighting until you reach that point where your winners are more than your losers. Nobody wins all the time and have zero loss. Nobody at all. Don't take my word for it. Take the word of people like George Soros, like Peter Lynch, like these unbelievable fund managers and traders who make tons of money. They all said the same thing. Nobody makes money on every trade. Nobody makes money on every day. Nobody makes money on every week. Nobody does that. But what you need to do is, first of all, you need to understand this, because I know a lot of people, especially beginners, they get 2, 3, 4 great trades and they feel like they are on the top of the world. But with the first stop loss, they feel like it's the end of the world. It's not the end of the world, buddy. You made profit on 4 trades and now you lost 1 or even 2. It does not matter. You have 4 winners, you have 2 losers. If the money is still positive, then you are okay. This is my promise to you. Okay, people? So with this, I'm going to leave you now for a few minutes. I'm going to take a break. And after the break, of course, we are going to continue talking about the market. And I want you, don't forget to join our Telegram group where we, as you can see, guys, we send these recommendations. Let me show you. We send these recommendations here, guys, as you can see on our group. Okay, so join this group immediately. I don't want you to miss any trading opportunities that I will be posting to this group. This group is now mine. I'm in control of this group, and I want you guys to be there. I want you to pay attention to every signal that I am going to be sending you right there. So thank you, QTimeFX, for this generous sponsorship. It's the reason why we are here, guys, you and me. We are talking to each other. We are trying to hunt opportunities in the market. So QTimeFX, thank you very much. QTimeFX, guys, wants you to make it. That's why they got me. They got you an experienced trader to try and help you find the best opportunities in the market. They are offering you trading with fantastic spreads. They don't want to cost you a lot in trading. That's why they are offering you the chance to trade with fantastic spreads and zero commission. Zero commission, guys. If you find a broker who is offering you that kind of spreads, these kinds of spreads, that's fantastic. That's great. But when there's commission, nah, that's not so very great. But no, not QTimeFX. Get the guys in QTimeFX. They want you to make money. That's why they want to cut your trading expenses to a minimum. And that comes from a very tight spread and no commission. And you don't have to worry about your funds at all because they are segregated in UOB, which is ranked in the 22nd place in the whole world, guys, between world banks. And of course, on the top of that, they are providing you with education. They are providing you with trading opportunities. They are providing you with very tight spreads. They are providing you with zero commission and segregated funds. And on the top of that, they are offering you the chance to get yourselves $500 of bonus. These are real dollars, guys. This is not a trading credit. This is not just a number in your account. These are real dollars that QTimeFX wants you to withdraw and enjoy. They want you to take their money. They want you to be happy. So you tell everybody about QTimeFX. You tell your friends, I got $500 from QTimeFX. Really? How did you do that? Please show us. And then we will have more clients, and then we will be able to provide you with more fantastic services, more webinars, and we will be hitting profit together, guys. This is what I want for you and me. So open a VIP account with QTimeFX with a minimum deposit of $150 and get your chance for a fat bonus. When you deposit $150, of course, for the people who don't want to put too much at the beginning, we are offering them the chance to have a bonus of $250, which is, of course, more than your deposit. But this is not the bonus I want you to go for, guys. I want you to go for the 500, and that comes with a deposit of $300. Okay, people? So come, open your account, and get that bonus. I want you to spend that bonus. I want you to take that money and enjoy every dollar. One important note, to get these promotional benefits, you must contact FX_Dcast via Telegram. So again, Telegram, guys. The group is on Telegram, and these promotional benefits can be yours only if you contact FX_Dcast via Telegram. So do that right now. If you have a Telegram, join the group and contact us right now. If you don't, get yourself a Telegram and join the group and contact us immediately. The guys from FX Educast are very friendly, very professional. They want to help you. They want you to be happy. They want you to make profit. They want things to be easy for you. So they are going to answer all your questions. If you have any question about our broker or about the promotional bonus offer or about anything at all, just send us. If you want to ask us about football matches results, we are going to answer you. Okay? And of course, if you need help opening the account, we will be there. So don't wait, don't hesitate. Get on Telegram right now, join the group and contact FX_Educast, and we will be there for you. That's it for the first hour, guys. We're going to take a break of 5 or 6 minutes, and we will be back. So don't go away. Okay, my friends, we are back. How's everybody doing? Welcome back. This is your host, Munther Marji CMT, with FX Educast and QTime FX. We are all here, very happy to have you. We want you to be trading the best opportunities in the market for today, and that's why we are here today. We are trying to get the best trading opportunities for today. Yesterday was a very boring day. The daily ranges were very, very small, especially on the euro. It was tragedy, to see the low and the high this close to each other. But recently, it's not something strange. It happened many times to the euro that we had an extremely boring day with less than 30 pips between the high and the low. I was going to say between the stop and the limit. So less than 30 pips. That was a boring day. Today, I really hope we will get some action. Tomorrow, I'm sure we're going to get some action. And you know why. We have very exciting events coming in the next 2 days, couple of days. So you need to keep your eye on the news. You need to keep your eye on what's happening in the world. I really recommend that you have financial news channel in front of you. Most of the time when I trade, well, most of the time that's not really accurate. Regularly, from time to time, at least for half an hour or an hour a day, I trade in front of the TV with a financial news service in front of me, and I watch what's happening in the world. What news do we have? This is the best time to do this because we have very important events on the agenda for this week. So we talked about the euro before the break, and of course, guys, I really want to thank QTime FX for this generous sponsorship. They are the reason why you guys are seeing these recommendations for free. Believe me, these recommendations are not free. The trading techniques that I show in these webinars are not free. Believe me, people pay thousands for these things. And I promise you this. My clients, my trainees, they pay thousands to get the kind of training that I give parts of during these webinars. And of course, my service my trade advisory service, where I recommend the trades to my clients, also costs a lot of money. But they are here free on YouTube for you guys, for everybody, because of the generous sponsorship of QTime FX. QTime FX got the award for the lowest forex spread broker of 2018 by the ACI FMA, guys, and that was not a surprise, of course. Just look at these spreads on the screen. 0.4 of a pip on the euro dollar and the dollar yen, and believe me, I saw less than that with my own eyes. When I was trading on my account, I look at the spread, and sometimes it's even lower than this fantastic spread. And of course, that's accompanied by zero commission, segregated funds, and a bonus promotion. The bonus promotion everybody's talking about. Just deposit $300 and get yourself $500 of bonus, guys. $500. That's more than your deposit. I don't want you to shoot for the $250 bonus. I want you to go for the gold, deposit 300 or more, and get yourself $500 in bonus. Okay, people? So with this, let's continue talking about the market. Let me just switch to my chart, and let's go, guys. What's next after the euro? I want to talk about the pound. Of course, it's a huge week for the pound. You need to be careful. A lot of brokers are now increasing margin requirements for the pound pairs, and of course that's justifiable because we are going to have elections on Thursday, and it's going to be very important because this election is linked to Brexit and Brexit talks. So it is 2 in 1. It's not only elections, it is elections and it is Brexit. 2 in 1 for you guys. So huge moves in the pound should be expected. I don't want to give numbers, but it can be seriously huge. And that's why if you are trading the pound, you need to be careful. I'm gonna, of course, remember this buy. It was unbelievable here above this falling trend line, but this is old news now, so I'm gonna remove everything and start all over again. I wanna, yes, I wanna see the indicators, but I wanna start with the daily so we don't miss a thing. All right. Well, the indicators look a little bit exhausted, especially the stochastic indicator with this slow. They are more or less flat at the moment, but I don't like the fact that the fast is below the slow. However, they are just, you know, horizontal. It's not an actual cross. So we'll have to wait and see about that. The MACD is not generating weakness signs. On the contrary, the distance between the MACD and the signal line is increasing, which is good. This is bullish. And the RSI, of course, just because the RSI is above 70%, does not mean that it's time to drop. So we don't have a bearish situation here. But of course we need to be careful, and even without looking at the chart, we knew that we need to be careful. It's elections, guys, and an election that is linked to Brexit. So as I said, it's 2 in 1. What about the 4-hour chart? The good thing is that we are trading above the moving average band, sorry. Although this is not in an overbought or oversold area, it's not an oversold area, we do have this the fast stochastic crossing above the slow, and the distance between them is increasing. On the other hand, the MACD is giving exactly the opposite signal to what the stochastic is giving, so it's a mixed situation. It's obviously a mixed situation up until now. Let's look at the hourly chart and see if we have more clarity there. We are trading horizontally. It's very obvious. Look at this price behavior. It has been horizontal since, you know, 5 days ago. 5th of the month we got to these areas, or even before that, on the 4th of the month we got to these areas, and it's horizontal. It has been horizontal for a long time. Another pair decides to be as boring as possible, and I don't like that. I want excitement. I want to see some excitement in the market. So let's try and find support and resistance for today, guys. I may go to the 4-hour chart for that. Go back to this chart. And enough with the indicators. I want to focus on this last part of the move to the upside. And we do have some bullish observations. Of course, the distance between the two moving averages is increasing. This is bullish. The price is above the moving average. This is bullish. We do have long shadows here to the downside. This is bullish, but on the other hand, we do have long upper shadows here, which is bearish. I am really interested in these highs here. I think the resistance is here, not here. The resistance is here, which is, of course, 31.66. We have said this before. We tried to break this level. We had a buy at 66. Of course, it was not. That's not a large profit. Yesterday we got to 81. We're talking about 15 pips or something like that. Today, if we start trading above 66, or even if we try to break above 66, I think it will be a good time to jump on the long side of the market. So my resistance is going to be, this is the first piece of information I'm going to leave on the chart for you guys. Resistance is at 31.66, and we are getting very close to that. We were in the 50s when I started talking. Now we are pushing towards the 60s. What about support? For that, I'm going back to the hourly. It's not easy to spot, to tell you the truth, because this part here is horizontal. Maybe the bottom of the horizontal range. Let's also try the rising trend line from this bottom right here, last week level. This is very close to the moving average band. I like this. We also have another support here. It's obvious. Look at this bottom right here. It is 31.34. Here it is 31.33. So I really prefer to use this bottom right here as my support for now. So support is 33. 33 pips between the support and resistance. That's good. Last week when I said we should buy, I said we should buy the minute we start trading above 31.66, and again I really believe in that. 1 pip, I'm not going to wait 10 pips above it. So I'm gonna place my buy at 31.67. Now my stop should be below the support, of course. Why am I favoring the upside? Can anybody tell me why? Munther, you are using only 1 pip above the resistance, but you're going to use maybe 20 or 30 pips below support. Why? Well, for many reasons. One of them, we have rising trend lines, we have rising moving averages, we are trading above the moving average. So all of these things prefer the upside. And of course, the move itself, the price itself, look at this. Look at this. So we need to favor the upside for as long as we see the prices doing these things. I don't actually remember who said this. Maybe it was Jesse Livermore, my own personal hero, in my own opinion, the greatest trader who ever lived, who said things that look high in price are going to, or he said stocks. I think he said stocks. He said stocks that look high in price are going to move higher and higher. And stocks that look low in price are going to move lower and lower. That's one of my favorite quotes ever. So a lot of people, unfortunately, guys, for a lot of people, when they see this kind of move, they say it must come down. So they start trying to sell. But they are ignoring the fact that if it was not a very strong uptrend, we would not see this on the chart. So we do have a strong uptrend. We are moving to the upside. We are traveling north. And to ignore this and look for a sell is just, it's a risky situation that I prefer not to be in. So things that look high in price, like here, oh my God, we were here and now we're here, so we must fall. No, there's nothing called must. And I prefer to be on the side of the move, on the side of the strong move, the direction, the trend, until the time that the market signals otherwise. So if the market tells me enough is enough, and that comes, of course, with a break below moving average, with a break below a rising trend line, yeah, I admit that now there's a change. But unless I see that change happening on the screen, on the chart in front of me, I will not invest my money in this change in direction. Okay, so I prefer to be on the side of the market. That's why I have 1 pip above resistance, but I'm gonna place, how about 20 pips below support, 33, so it's going to be 13. Yeah, not bad. 31, 13. Yeah. 54 pips, that's reasonable. Now, what about the targets? Target 1, target 2. For initial target, we, of course, I think we have a retracement at 32.19. We talked about it many times in the past. If we go to the daily chart, I'm sure I can show you what I'm talking about. Here's the buy at 31.66. This is in the target 32.19. And I'm gonna, copy this also 3266. I'm gonna show you why. This is the 3219. It is the 88.6 retracement for the whole drop from the top seen back in March to the lowest price seen this year, which was in September. And 88.6 is one of the Fibonacci levels that we need to care about. So it's going to be our initial target. And I'm also, of course, you know me, I like these tops here. So I picked a top here at 66. Is it 66? This is actually 69. This is 61. So we can adjust this to 69. Yes. This is our buy signal for today. Now, on the other hand, if we break below 31.33 with a good number of pips, we should sell. I'm not with the sell at the current price, but if we break 31.33, that will change. So I'm gonna place a sell order at 31.13, 20 pips below support, and of course, I'm gonna place. I have to place my stop at 67 because it should be a reverse. In case we move up, in case we move down, we need the entry levels to be a reverse of each other, because if we don't, we may have two positions at the same time. If I place, for example, this at 77, that will maybe if the price drops before, or sorry, if it triggers the buy first and then it drops and then it goes up, I will have a buy and a sell for around 10 pips. I don't want that to happen, so I'm keeping the entry for the sell exactly as the stop for the buy, a reverse position. Now for the targets, target 1, target 2. Initial target, I don't want it to be really huge. So of course, if we break below this trend line with 20 pips and we're trading right here, we will be expecting a dive below this bottom, of course. And for that, this is 5. It's 5. Save. It's 5. It's 3. It's not easy to identify the targets here, but I'm gonna use retracement levels for this whole sequence from this bottom. I'm gonna use this bottom up until this top, because if we break this trend line and we break this bottom, then obviously we are in a corrective sequence. It might be A, B, C, and C usually targets retracement level. We have 30, 43. This is the nearest one, but 30, 43, that's 70 pips. No, I want something closer than this, but I'm going to use the 50% as my second target, which is 30.01. Now I want something that is even closer than this. How about this top right here? 30.64, yeah, 64. We'll make it 63 in order to make this around 50. So these are the recommendations for today, guys. If you have your account with QTimeFX, go directly to your QTimeFX account and place them there. If you are still trading demo, trade them on your demo account. If you want to just copy them and see what happens to them, see if they are good or not, take a screenshot of these numbers and come back tomorrow and see what happens. Now I'm going to try and create these recommendations and send them to the Telegram group. I want you to be a part of that Telegram group, guys. Okay, so we have a buy at 31.67 with a stop at 31.13. Now I am going to place an order. My target's 32.19 is going to be this one. 32.19. 52 pips. And we have 30, I think 66, right? 69, we said 69. 69, that's 102 pips. I'm going to give you even a smaller target for this one at 32. Okay, so this is our first signal. Now I think we need to make this 40. Okay, and place or so guys, once again, this is an opportunity for me to remind you to join our group, because as you can see right now live in front of you, I am preparing my recommendation to send to this group. So in case you missed the video for any reason, you can still find us there. I'm going to be there every day. I'm going to take care of this group. I'm going to give you signals there. USD one, and again I want I want to, sorry, we do have, where's the sound? Yes, this is going to be 740 as well. Pound. We're gonna sell at 31.13. 31.13 with a stop at 67, I think. Yes, it is 31.67. And our targets are going to be 30.63 here. That is 50 pips, right? And 30.01, which is 112 pips. And for a smaller target, what can we think we're gonna, we have a 13, so yes, 83 here, these bottoms right here. We can use this as a very small target. So 30.83, which is 30 pips. Okay guys, I'm gonna screenshot this. Send you. Yes, fantastic. Everything looks correct. And this is a second pound recommendation for today. And then to our Telegram group. Again, guys, I want to remind you that you should join our group. It's going to be an exciting group because we are going to take care of this group, and you don't want to miss anything. Okay, so let's send these pictures, the pound, to recommendations right to that group. There you go. We have the buy at 31.67, we'll stop 31.13, limits are 32 for you guys who like the very small targets, medium targets 32.19, and guys who like the big targets 32.69. Now the sell is going to be at 31.13 with a stop at 31.67. Initial target or the very small target 30.83, medium target 30.63, and 30.01 for you guys who can wait. Okay, now to my real QTime FX account where I'm going to place these orders. I want to buy at 31.67 with a stop at 31.13, and I'm going to use target, the initial target 32.19. I'm going to use this 32.19, 52 pips. Yeah, that's good. And place. Go directly to your QTime FX account, guys, and place this order. Now we have another signal, of course, and that is the sell. I'm going to sell at 31.13 with a stop at 31.67 and a limit at 30.63.50. Not bad at all. Go directly, guys, to your QTime FX account and place these orders right now and go. So you can see now we have another order on the pound to sell in case it drops to 31.13 with a stop at 31.67 and the limit at 30.63. So with this, we are done with the pound right now, guys. Again, the group, guys. This is our group. Contact us, and we do have FX_Ducast on Telegram. Contact us there for any kind of help. We are going to be there. If you want us to add you to the group, contact us there. If you want to ask about the promotions, contact us there. If you want to open a real account and immediately start making profit and fighting for that bonus we want you to have, then you must contact us there. Now, guys, we want to talk about the pound, the dollar yen. We can continue our analysis. We finished talking about the euro and the pound, the European currencies. The pound, of course, we have the elections this week, so pay attention to that. And don't risk too much. If you want to be in the pound on election day, keep your trading size to a minimum, please. Okay, we don't want you to be surprised by the election and then the price and the market moves sharply and then you lose money. We don't need that to happen, guys. We don't need that to happen, okay? So always be careful when it comes to these events. Now, after being done on the pound, let's take a look at the dollar yen. The dollar yen is unfortunately finding support in the 108.40s, and I don't like that. Let's see what the indicators say first on the daily chart. We must be careful. On the 4-hour chart, not good. Not good at all. We are finding support in the 40s. Okay, guys, just like last week. Just like last week, we are finding support in the 40s, and to find support twice around the same area, that's not very good. So for today, I think we need to be careful, because this might be another attempt to move higher. I really hope it's not, but there is a chance of that happening. The stochastic is a little bit better than other indicators, but overall it's not a very bullish, it's not a very bearish situation, sorry. Now, what I want to do for today is I'm going to draw a trend line rising from Friday low. As you can see, when the jobs number came out, we had this move. The dollar moved higher. Of course, that was expected, but it was very short-lived against the yen. This is good. This is good for our expectations. Why is that? Because when the market gets good news for the dollar, but the reaction is short-lived, that means the yen is in a good position, because even with such a beautiful, strong number like the jobs number on Friday, the dollar was not able to break much higher, just a little bit higher. And then the yen took control of this market again. So this rising trend line from Friday low is currently running in the 40s, very close to yesterday American session low. Actually, it's the low that was seen right after the close of the American session at 47. I like the support here, 47. While this falling trend line is in the 80s, it's at 83 currently, but we do have a level that is just a few pips above it, the Fibonacci 38.2 at 88. So I'm going to use this resistance and this support. So the first piece of information I'm going to leave on the chart is support and resistance. Support at 108.47, resistance at 108.88, and with that, of course, we can start building our trading strategy. I have talked about my opinion many times. I really believe that this pair has a good opportunity of absolute crashing, but we have something that we really need to happen in order to do so. We need not to break above 109.37. 109.37, we are less than 100 pips, around 70 pips below that. At the moment, I want that level to continue to resist any bullish attempts. Once we break above it, I will give up. But unless we do, I will not give up fighting for and rooting for the yen, not for the dollar. So I expect this pair to dive any time. So people, with this support and resistance, what I want now is to build my trading strategy. I'm going to start with the short, my favorite position. If we start trading below 108.47, I want to be sell, I want to be short, I want to be on the betting on the lower side of the chart and a move south. So I'm going to sell once we start trading below this 108.46. 1 pip, yes, 1 pip, yeah. I know you don't like that. Some traders come to me and say, well, Munther, 1 pip? Why don't you wait? Well, because of the overall technical outlook. This is something that you really need to care about. The big picture, the overall technical outlook. Of course, if a support is broken, I would expect the market to move south. If a resistance is broken, I would expect the market to move north, up. But it's not equal. It is equal when there are no strong signs on the chart favoring one side over the other. But when there is a number of observations on the chart that obviously favor one side over the other, you need to lean towards that side. And we do this with these kinds of differences. For example, I'm going to place my sell 1 pip below the support, but I'm not going to place my buy 1 pip above the resistance. I'm going to keep it 20 pips above the resistance, which means 109.08, right? Now the targets. Target 1, target 2. Let's look for targets. If we start trading below the 40s, that's great, but we still have the 20s to worry about. And once we clear the 40s and again the 20s, then the technical outlook will be great for the yen. But right now we are trading above these two support areas. Remember when we used to stop in the 20s here last month, and now early this month we are finding support in the 40s. That is, of course, not very bearish. Anybody can understand that, because we were stopping in the 20s, finding support there, and now we are finding support in the 40s. That means higher lows. We had the lows here, now we have the lows here. That means that the market is ascending. So we really need to break below the 40s and the 20s before we can feel good or very good about this position. Now, these bottoms here I'm really interested in. 107.87. This is going to be my target for today. 107.87. That means 59 pips. Yes, reasonable. Target number 2 is going to be much larger than that. You know me, guys. I am betting on 104, but I'm not going to give you 104 today. I'm going to give you a closer level. After the 107.87 here, I'm really interested in this bottom right here, 106.96. And this is my signal for today. Now, what about the resistance? The resistance, of course, is 88. If we start trading above 88, this Fibonacci level right here, I want to be long. So I'm going to buy 20 pips above this level at 109.08. My stop is going to be, of course, 108.46. Reverse positions. I'm sure by now you know how I do things. And our targets is going to be target 2 is going to be 10.13. It's a retracement that I remember from last week. We have a retracement there. But I want to give you a smaller target for target 1. I want it to be something around 50, something like that. And what's better than this top right here? 73. Yes, 73. No, not 73. And yeah, so this is our recommendation for now. Now let's place them, or first I want to send them to the group and then place them on my account. No, not this one. I need to find the right slide. Yes, this one. This is going to be 7 GMT. Actually it is 8 GMT right now. We are getting close to 8 GMT, not 7:45. So 8 GMT, USD JPY. We will have a buy at 109.08 with a stop at 46, right? 108.46. And now the targets are going to be 109.73 here. 109.73 and 10.13. 73 is of course 65 pips. 10.13 is 105 pips. And I'm gonna place a smaller target for this one. I need to check the chart again. 08. In the early 40s we do have a support, previous support around 42. Now it's expected to be a resistance, so I'm going to use that. Yes, 109.42, which means of course 34 pips. And I'm gonna of course screenshot this. What happened? So this is the signal for today, guys. For the yen, the buy, the one that I'm not going to be very happy if it's triggered, but I'm not gonna remove this order until, of course, the closing of the European session. So this is the end. Now I want something for the short. It's going to be around 8, of course. It's going to be 8 GMT in a few minutes. Now the short, of course, dollar yen. Entry is at 109.46. Stop is, sorry, 108.46. Stop is 109.08. Right? Target 107.87. I'm going to use this number as a second target. And we do have 696. Now I want a target that is closer than this. This here is 22. I don't know if it's too close, but I'm gonna use it. 108.22, which means 24 pips. Now from here to here is 59 pips, of course, and this is 150 pips. And screenshot again. So 108, stop 109, 108, 107, 106. Great. And I go to my Telegram and I send you guys these recommendations. That's why I want you guys to be a part of this Telegram group. Okay? Now I'll go to my account my QTime FX real account, and I'm gonna place my orders. I'm gonna start with the one I like more. 108.46 we're going to sell. We are around 15 pips above that at the moment. My stop is going to be 109.08. And my limit is going to be, I think, 107.87, yes. 107.87. And place. There you go, guys. Sell dollar in at 108.46, stop at 109.08, take a profit at 107.87. The second target the second order is going to be the buy in case we reach as high as 109.08. In case we break above the resistance, which is 108.88 for today, I'm going to place my order to take advantage of that break, because if we break 108.88, then the market will change. Of course, it will become expected to move higher instead of lower. Now 108.46, of course, and what target I'm going to use here, it is the 109.73, of course, the recent top, and place. So now on my QTime FX live account, I have my orders ready to take advantage, and you should do the same. Go to your QTime FX live account. If you don't have one, you are missing out on a lot. Very tight spread, zero commission, free recommendations, bonus, everything that you want is in this account. So don't wait, don't hesitate. Open your account with QTime FX today. And if you do, if you are one of our clients who already opened the account, then go to your account and place this order as well to buy dollar yen at 109.08 with a stop at 108.46 and a limit at 109.73. As I always remind you guys, all of these recommendations are valid up until the closing of the European session. If we get to the closing of the European session and these orders are still there, cancel all orders that are not triggered. Of course, for open positions, we keep the open positions until they reach stop or limit, or the next morning when we meet again, the next webinar, we need to close them, because of course there's going to be another webinar with other training recommendations and of course a new day, a new method, and new positions. So we need to close them to be prepared for that. With this, guys, we are coming to the end of the second hour. And again, guys, before I go on a short break, I want you to join this group, guys. Join this group. We have hundreds of members there, and it's growing, and it will grow. I promise you this, it will grow, and it will be even bigger and bigger and bigger, because I am going to take control of this group, and I'm going to take it to the sky. I'm gonna make you guys talk about this group to everybody you know. So I'm gonna send you my recommendations here every day. I'm gonna try my best to give you profit, to give you the best trading recommendations in the market. So join the group, join the group, join the group, join our Telegram group. Okay, guys, now it is time for our second and final break of the day. And I want to remind you before I go that this live stream is sponsored by QTime FX, our favorite Forex broker in the whole world. Guys, QTime FX offers you the chance to trade with a maximum leverage of 500 to 1. These guys got the award for the lowest Forex spread broker of 2018 by ACIFMA, and that was no surprise, because just look at the screen. These beautiful spreads can be the spreads you are trading with. Not 1.5 pips and 2 pips. No, 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 no. 0.4 on the euro dollar and the dollar yen. So come trade with us and enjoy these fantastic spreads. And of course, that comes with zero commission. What? 0.4 on the euro dollar with zero commission? I mean, I have seen this spread around, but that comes with a commission. So you're not forcing me to pay any commission, and you want me to trade with only 0.4 of a pip? That's exactly what I want you to do. Exactly. I want your trading cost to be at the minimum, the lowest trading cost possible. And that's why I chose QTime FX, because they are offering me the chance to give you guys, my viewers, my soldiers, my friends, my fellow traders, my brothers and sisters, to give you the chance to trade with the lowest trading cost possible. Very tight spread and zero commission. So QTime FX offering you this fantastic combination, and they are, of course, the kind of broker who keeps their client funds segregated. And we're in UOB, which is ranked in the 22nd place in the whole world, guys. And to top that, of course, they are offering you the chance to get yourself a fat $500 bonus. Get it. I want you to get it. I want every one of you to get it. Come open your account with us and get the bonus. Make a deposit of $150 and get $250 in bonus. Make a deposit of $300 and get $500 in bonus. Okay, guys? But there's one important thing. To get these promotional benefits, you must contact FX_Ducast via Telegram. You must contact FX_Ducast via Telegram. This is where you will find all these promotional benefits waiting for you. You will find a very friendly team waiting for you, very professional team waiting to help you, waiting to answer your questions, waiting to give any kind of assistance that you need. So don't wait, guys. Contact us at FX_Ducast via Telegram, and let's open this account for you today, where you can immediately start implementing these trading ideas that I give you every day, like this one, like these trading recommendations on the dollar yen. When you open your account with us, then you will be giving yourself the chance to make these numbers on the screen into real profit, real dollars on your account. Not just a recommendation that you keep your eye on. Well, yeah, Munther said sell at 108.46 and that was triggered. And well, yeah, now it's 108.20, so they are in profit of 25, 26 pips. That's good. No, I don't want you to watch these webinars and say that's good. I want you to watch these webinars and say, I made profit because of these recommendations. That's why I want you to open your account with QTime FX, guys. These spreads are calling you. They want you. And I want you to be there. I want you to be with QTime FX. We are trying everything to make this a great experience for you, from tight spreads to zero commission to bonus to free webinars. So contact us at FX_Ducast via Telegram. First, join the group, ask to join the group, and then, of course, open your account with QTime FX and get the $500 bonus, guys. I want every one of you to get $500. Okay? Now, it's time for a break. I'm going to take 5 or 6 minutes, something like that, and we will be back for the last 45 minutes or so of today's webinar. See you then, guys. Welcome back, everybody. We are back for our third and final part of today's webinar. Very happy to be with you, your host here, Munther Marji, CMT with FX Educast and QTime FX. And we have been trying to spot trading opportunities in the market today. And we have recommendations issued so far on the euro dollar, the cable, and the dollar yen. And before I continue, I just want to remind you that you can be a part of our Telegram group, where we send you these recommendations immediately and live on video, or the moment we issue them. I place them on my own personal account with QTime FX, and I send them to you guys on Telegram, and I keep them on a chart right here. Joining our Telegram group is going to be a great idea. Why is that? Because if you missed the video, the signals will be there for you. If you, for any reason, for a minute or two, was away from your laptop, from your computer, you can get these signals right to your mobile, and you will not miss a signal. And there's another reason, and that is that we are focusing on this group. We want this group to grow, so we are doing everything we can. We are providing it with recommendations, and of course, if you have any questions at all, I'm going to be answering them on that group. So let's talk. If you have anything you want to talk about, we have hundreds of members there, and it will be very good to hear from you guys. Okay, so with this, let's continue for the third and last part of today's webinar. And today's webinar, guys, is of course the first in English for this week. And we tried another language yesterday. Today we are back to English. And the last part is going to be dedicated to dollar index, and if we can fit, if we have enough time after that, we're going to talk about gold and oil commodities. Maybe we will not have enough time for oil and we're running out of time, but I'm really interested in taking a look at the dollar index and gold because we have the Fed. So let's do this. I want to take a look at the indicators. This is not very bearish. I'm sorry to say that. This is bearish. This is not very bearish. This is medium. So let's take a look at the 4-hour chart. This is also not bearish. This is bearish. I like this. I like that the price is fighting resistance very close to the moving average band. So guys, I went back to the chart that we used last week to analyze the dollar index, and of course, I'm sure you remember this wave count, and I just left these numbers on the screen so you guys can remember them. We said that we have resistance between 39.45. We got to 53, imagine this, only 8 pips above the resistance, and then boom, we started falling. We said we did not specify support here. That's odd, because obviously this is a support, and this was a support as well, and 98.20s and then 98.06. And of course, as you can see, once we broke this support and then the support, the drop continued, and the dollar came under pressure. So is there a reason to expect that this is going to change? Well, honestly, the wave count is very bearish. It's very, very bearish. And the reaction to the termination of wave C is also bearish. And the reaction confirmed this wave count, because we had this wave count even before this top right here. And from there, of course, after a 5-wave sequence to the downside and then a 3-wave sequence to the upside, we need to see another sequence of 5 waves to the downside. This is the norm. This is what usually happens, and we can count this as one, obviously. Now we started recovering. Now this is what is expected to happen. However, wave 2 is still developing, so it might need another part. Why am I saying that? Let me show you guys. This is a first move to the upside. This is a second, and we can also see a third. Usually corrective waves within Elliott wave analysis come in the form of 3 waves, sometimes 3 separated by an X wave, and then another 3, which we call double 3. There's also triple 3, but it's very, very rare. Double 3 is not rare. I have seen it many, many times. We have a double 3 on gold, for example, at the moment. So this here, the dollar recovery from these bottoms right here does not look complete. We may still have another push to the upside for the dollar before it starts falling again. So an ABC to the upside will make this wave count, sorry, not this one look like this. Yeah, I want to be here like this. Yeah, so we cannot neglect this possibility. It's something that can happen, definitely can happen. But what we are trying to do here is that we're trying to estimate the chances of this happening. Another move to the upside to complete an ABC to the upside, or a drop from current levels immediately. Honestly, I prefer a little push to the upside on the dollar, but let's see support and resistance. Is this too complicated for you guys? When I start counting the waves, is that too complicated? Okay, I'm gonna focus on the 3 levels that I like most, which are the 50, 61.8, and 71.4. Now, with this recovery attempt topping just a little bit below the 50%, if we have an ABC, then this C is definitely going to go beyond the 50% level. Of course, there's nothing called definitely. What I mean is that there's a huge possibility of that happening, but nothing in the market is 100%. Nothing, not even 1 pip. So we might see the C wave targeting 61.8% of this drop here before, actually we need to adjust this, I'm sorry. We need to, yeah. Now it's more like it. So we might get very close to 61.8, which is just about 98. That means around 50 pips, 40, 50 pips above current levels. We might see that happen before the dollar collapse again. However, if we break support here, then that's it, in my opinion. We don't need to wait for the dollar to rise again in a third wave to the upside, third corrective wave, of course, wave C. So this support right here is very important, in my opinion, for the wave count. It is 97.56. We are currently trading pips above that. So just another push to the downside on the dollar, and I think it will become under pressure again. It will come under pressure again. Okay, guys? So this is it for the dollar index. In all cases, it's an overwhelming bearish situation, in my own opinion, for the dollar. I think the dollar is going to suffer a lot on the medium term, a lot, not just a little bit. And the wave count, everything points to that. But of course, every day we're going to update that. We're going to look for clues on the chart to support this idea or negate it. So, and I'm going to update you every day, of course, on the dollar index. It's very important to take a look at the dollar index when you are trading Forex. Very, very important. Even if you're trying to trade the euro, pound, anything with a dollar in it, it's not enough that you only look at the chart of that instrument. I really recommend you look at the dollar. So 97.56 is a support that we need to keep our eyes on in case it's broken to the downside. I think that's it. That's it. That will means we don't need to wait for another push. That means that this is wave 2. This is wave 2 up to here, and now wave 3 is already underway, digging deeper and deeper for the grave of the US dollar. And I think that United States will be happy about that. In this age of trade war, a weaker currency is welcomed. Everybody wants a weaker currency. So maybe they are really pushing for that under the table. Who knows? Who knows? But from the charts, I really expect that the dollar is going to face very hard times on the medium term. Now, let's try and talk about gold and oil. I love trading commodities. You know, I'm a Forex kind of guy, but I really, really like commodities. So this is, my God, who's the genius who counted the waves like this? This is a wave count, obviously, from last week. We were here probably when we started this wave count, so it's going, this was last Thursday. Let me just adjust it a little bit. My God, that's amazing. We were expecting wave C to reach very close to wave 2. Because, oh my God, this is an unbelievable. I'm very happy about this. It's like seeing your work done for you in front of you. But of course, I did this for myself a few days ago. It's a fantastic wave count. It expected this dive and gold to continue, or to complete, sorry, to complete a 5-wave sequence to the downside in the form of wave C. So we are almost there. We are almost there, and now it might be time to travel higher again. The top of wave 4 is usually a point that is important in estimating if the sequence is done or not. So I'm gonna use this as my resistance for the day. This is 65.4. $65.4. Now, of course, I just want to say this about the dollar index. We don't issue trading recommendations on the dollar index. It's mostly an index to gauge the strength of the American currency. I know we have CFDs on the dollar index, but we don't trade that. It gives you an idea about what to expect for the dollar. But I'm not going to issue trading recommendations on the dollar index. It's very important to check it out in order to estimate the chances of the euro, the pound, the yen, gold moving up or down, moving higher or lower. And maybe, I've been thinking about this for a couple of days, maybe more than that. Maybe we will be starting with the dollar index for the future. From tomorrow, we're going to do that. We're going to start the webinar with the dollar index, so we have an understanding of the strength of the dollar, and then we move to other currencies. We're going to start doing that soon. I hope I remember this tomorrow and start with the dollar index. Okay, so our resistance is wave 4 here. The top of wave 4, I want the price to go higher. Maybe we can find a closer resistance if we go to, oh, this is good. It's good, it's getting good, it's getting better. I'm gonna just lower it a little bit to the downside and choose the highest close, 64.7, just a few pips to get in early, 64.7. Now support is going to be this here, the 88.6 level is at 1457. Support at 1457. So it is 77 pips between support and resistance. We can place our orders 10 pips above, 10 pips below, and still below 100 pips of a stop loss. Let's do that. My favorite for today is the buy. For gold, of course, it's always the buy. I'm a gold bull, euro bull, dollar yen bear. These are my 3 battlefields that I visit a lot. At the moment, I try to find opportunities to buy gold, to buy the euro, and to sell the dollar yen. So only 10 pips above that, 14, let's make it 5, 65.2, because the stop is going to be very close to 100, so I'm trying to lower the stop just a little bit, and I'm gonna take the 0.2 as well. So buy at 1465. My stop is going to be 10 pips below support, 1456. That is 90 pips. That is 90 pips, yeah. Not a small stop, but it's still within, below the maximum that we are willing to accept. The maximum is, of course, 99 pips. This is what I always say. I place up to 99 pips. I don't place stops at 100 pips. So it's 2-digit, always 2-digit, not 3-digit. Limit, I'm going to find you 2 targets, guys. Target 1 and, sorry about that, target 2. Target 2, I'm not giving up on this level, guys. I've talked about it. I've been talking about it for a while now. 1495.9. I want to see the price go there, and it's going to be my second target for the time being, for as long as we don't reach there. But I want, of course, I want a smaller target, and here maybe the bottom of wave 1 of 1 lesser degree, which is the starting point of wave 2 of 1 lesser degree, is 7120. 7120, yeah, that's okay. 7120, that is what, 62 pips, okay. Although I would like I always like to give higher targets for gold because it's a volatile instrument. But for now, initial target is going to be 71.2. Now for the sell, we are going to short in case the market can break below support, 10 pips below support, and I'm short. and that is going to be, of course, sell at 14.56. Stop is going to be 14.65, and two targets. Target 1, target 2. Target 1 is going to be, how about 14.50? It's almost a psychological level. It's not a really that huge psychological level. And target 2 is going to definitely be 14.46, the Fibonacci level, which saved the day when the precious metal really dropped recently. This is the lowest price for the past 2 months, I think 3 months, something like that. So this is the lowest price for this period. It was 1445.82 if you want to be exact. 1446 is fine. And this is the second recommendation for today. I'm going to keep them here side by side so you guys take a look at them. Or what's better, don't waste your time trading demo, guys. I always say this, don't waste your time trading demo. As an absolute beginner, you need demo trading for a couple of weeks, 2 to 4 weeks max. But you guys who say, well, I'm going to try demo for 3 months or 4 months, you're wasting your time. Don't do that. Don't do that to yourself. There is nothing new that you can learn from demo trading, because without the feeling of trading real money, you will never feel this market. When you trade demo, it's a game. When you trade real money, the market is in your veins. You feel every beat. Okay, so don't waste your time trading demo more than you should. Open your account with QTimeFX and copy these recommendations right now, like what I'm going to do. Of course, I'm going to place these orders, but what I want to do here is that I want to issue these signals to my group. I'm going to have all right, we're going to have a sell. Sell is going to be at 14.56. The stop is going to be 14.65. Sorry about that. Now the targets for the sell are going to be 14.50 here and 14.46, and even a closer target. I'm gonna give you 30 pips here, only 30 pips. So you're 30, then 60, then 100. And I'm gonna, of course, guys, I'm gonna screenshot this, and I am going to send this to the group. So let's take a screenshot, create a picture. Sorry, we forgot to change the time. 8:45. Okay, now we screenshot and so here it is. Let's check the numbers: 14.56, 14.65, 53.50, and 46. Everything looks correct to me. And see if it's going to be XAUUSD2 because it's a sell. The buy signal is going to be number 1, Where is the buy signal? Slide for that. I want something with the current date. Don't ask me why. That's how I feel. You know, when I see 10th, I go for it. Okay, 45. Again, gold. We're going to have a long position at 14.65. What's the current price? What's the current price here? It is around 63. We still have time. The market's not very close to our entry. 14.56. Now the targets. Let me check the targets on the chart too. Right. I'm going to use this as second target. Of course, this is 62 pips. And the monster target, I call it, 14.95.9. That is 209. Actually, it's 309 pips. 309 pips. Whoa, that's a monster of a target. But I really believe if you wait enough without any surprises on the chart, this is where we are going. I really believe in this level. I want to wait for it. I really believe we can get there, and I really hope we do. But of course, every day we're going to update this stats. We're going to update this outlook that is very bullish on everything else than the dollar, gold, euro, yen, everything. And of course, our initial target is we want something less than this. I need to look on the charts. If we start trading above this, then